We've got Chris Conway joining us live in studio from the Australian Stock Report. Chris, welcome into the program. We're getting this breaking news, of course, but it's bigger picture-wise, keying off still the jitters from North America. That's undeniable. What are your initial thoughts on the 500, some levels, as you're reading them from where you sit?
Yeah, so the 1870 level on the S&P 500 continues to remain all important. The market has managed to hold above that level, but you know it's coming under fire. We are in the throes of US reporting season. Everyone knows that the expectations aren't great. We've seen Apple get hammered 5 or 6% overnight, and of course Boeing as well. So there's the potential that that level gives way, and that I would think would drag the Aussie market lower as well.
For Boeing, just before, not to get bogged down in the US story, but the fact being, with cheaper energy, a sense that consumers are going to key off that. There's going to be more flights. The Asian story, the runaway growth of that consumer looking to capitalise. Surely that would be a net benefit for a Boeing outlook story. Why not?
Well, one would think so, and I think that's why it's the big concern, is that Boeing has come out overnight and said that they're unlikely, or they don't think they're going to sell as many planes in the coming year as they did in the previous. So all those things you were just talking about, yeah, the consumer benefiting from lower energy prices, wanting to travel, all those sorts of things aren't actually translating on the ground, hence why I think a lot of investors are worried about where is growth going to come from.
Sure. Moving on from that to sort of a local story, because we're watching Fortescue in the mining space quite closely today. Fortescue with its production numbers, obviously, and it's popping about 5% right now. What do you make of the news out of Fortescue? It's continuing to pay down its debt. Obviously, that's a good story. It's, you know, its production's on track. But what's your view longer term?
Yeah, look, I really love today that they brought their costs down and they've got towards the sort of BHP, Rio Tinto cost levels. I think that's super important.
And they had to do it, right?
Yeah, they absolutely had to. I think it's a credit to the fact that they have worked hard to get there. Of course, they've had the scope to do it, but one thing to have the scope and another to deliver. So the fact that they have delivered, I think, is super important. It puts them in that ultra-competitive bunch, as I said, with Rio and BHP and probably Vale as well. As you say, have paid down debt. So it all looks as though it's moving in the right direction for Fortescue. The only caveat, of course, and it's the only thing that matters, is if they can't cut costs as fast as iron ore falls, it doesn't really make any difference.
Alongside this, you've got Newcrest, which is also rallying on its production and guidance being maintained.
Yep. Why
do you sense a more muted response from the shareholders today if you put it alongside the FMG story?
Well, Carson, you and I don't know whether you remember, have had some very interesting discussions about Newcrest in the past. I think they finally put their house in order, but maybe investors are concerned that it's a fleeting set of circumstances. Right. We all know about the production, or the issues at the Lihir mine, the unfortunate deaths that have occurred. All of those things have gone into the mix. Seemingly, like I said, they finally put it together with some strong production numbers.
You sound like you're almost hedging your bets, though, even in that. Seemingly, somehow...
Well, exactly right. And I think that's what the market is doing as well, hence why it's not popping like FMG. So
not conviction on that stock, really?
Yeah, not enough conviction. Yeah, they'd have to do it for consecutive quarters or probably even a year. In order to gain the market's confidence.
Can we talk about a stock that you're interested in that we haven't talked about, that's sort of unrelated to banks and commodities, and that's Tassal Group, right? What is the upside for this one? Well, you like it technically as well.
Yeah, really like it technically. It's been strong. All the characteristics you'd want to see: uptrend, higher highs, higher lows, solid volume. Salmon prices are very strong at the moment, and this is a bit of a swinging for the fences, but if Russia does lift their sanctions on Australian fish and indeed other Western foods, well, that should create a boon for demand for the salmon that Tassal produces. So, you know, that's, you know, a 5% probability of coming off or being rewarding, but, you know, I still like the technicals, and also like the fact that salmon prices are strong as well. So,
do they have enough in terms of fulfilling that type of a market opportunity?
Well, potentially. They took on DeCosti and rolled that into their business, and obviously got some increase in production there. So it would be similar sort of moves that they might make in that regard that could help fill that production need, if it indeed does eventuate, yeah.
It is a big if. Meanwhile, you know, what they're reliant on fundamentally, the China story plus the Australian story.
Yeah, well, the China story is not a bad one. We've seen Bellamy's and A2 Milk and all those other companies 400%, 500%, 600%. So it's not a bad story to be attached to.
They need a baby product, they don't
they? They do. Some salmon-flavoured baby product. I don't know whether that'll fly.
But speaking of all these China products, it is actually interesting because, you know, we are seeing a lot of concern around the Chinese economy about a downturn, but then on the flip side, you've got all these stocks exposed to China that are doing well. Yep. How do you balance that?
Well, that is a really good question. I'm actually really glad you asked it. It's a niche market, or it's a niche segment. We all know about food production standards in China. They sometimes don't meet the mark. We know know about the babies that unfortunately died when they had Chinese produced formula. So it's that worry. It's the fact that in Australia we've got great food production standards and that they're ready consumers there. So it is a niche market. The overall Chinese economy, as we know, is slowing, but that is one segment that, you know, they just want Australian produce, which is great.
And the banquets, though, the cutting back on the corruption, riven banquets of the past, because that's, I mean, the canapes and the tassel kind of go hand in hand, do they not? But if those banquets are being scaled back, common sense would suggest less of an appetite, pun intended.
Possibly. I think it's a bit of a long bow to draw, but we can go with it.
All right, Chris Conway, always appreciate your time. Thank you very much for joining us on the show today.